Hello, listeners. Welcome back to another episode of Cognitive Dissidents. As usual, I'm your host. I'm Jacob Shapiro. I'm a partner and the director of geopolitical analysis at Cognitive Investments. We're doing things a little bit differently this week. Rob and I have been trying to keep up with geopolitics and markets on a very granular level for the past couple of weeks. And when I woke up this morning and then after the CPI print, the hotter than expected US CPI print, it just kind of felt like the financial media was in this kind of hamster wheel. And I felt like we kind of had been trapped in the hamster wheel. So rather than deal with direct market developments this week, and there's a lot to take apart there. There's the US-China trade war. There's the UK bond crisis. There's like I said, the US CPI print. Rather than focus on those brass tacks specifically, we try and take a step back and just ask, what's going on in the economy today? How have we done for the past 12 months? What does the next 12 months look like? And what are some of the uncertainties and mental maps and frameworks that we're using? And where are those mental frameworks falling short? What are we failing to grasp? So it's a bit of a different conversation. Maybe you'll like it, maybe you'll hate it. Either way, just kind of indulge us as we grope around in the dark, trying to find the shadows on the cave and figuring out what's going on in the economy. We'll be back to our normally structured weekly updates next week, unless you guys love this so much that we could do this every week. But I really did want to take a step back and just take a deep breath and say, geopolitics is crazy, markets is crazy. Let's just take stock and see where we are. So that's where that conversation came from today. Hope you enjoy it. If you don't, you can always write to me at jacob@cognitive.investments and let me know, or let me know anything else on your mind. Or if you want to learn more about CI, you can also hit me up there. So without further ado, here's Rob and I talking about uncertainty in the world. Cheers. See you out there. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. All right, Rob, your last Cognitive Dissidents podcast recording as a resident of Cambridge, Massachusetts. How does it feel?
It's hard to take stock because I've been running around like a chicken with my head cut off. But it'll be nice to get a new scene.
I bet you're trading Cambridge for Paris, which is maybe one of my favorite cities in the world. I won't say that it's objectively the best city in the world because that would be too normative, but I'm jealous and hope to be visiting you there often. I thought for our weekly roundup, rather than chasing the headlines, we might try and take a little bit of a step back for a minute, because I feel like both geopolitics and markets have been so topsy-turvy over the past couple of weeks that we get on the podcast and we're sort of chasing the headlines that are dominating the day. And by the next week, there's a new, I've sort of unintentionally gotten into the hamster wheel of the global financial media echo chamber that I constantly try and avoid myself getting out of. So I've been trying to pull myself out of that echo chamber this week. And it's really hard because we've got Liz Truss doing whatever she's doing in the UK. We've got the hotter than expected CPI print that dropped today in the United States. This podcast is publishing tomorrow. We've got OPEC and its oil production. We've got the US announcing all sorts of new restrictions on semiconductors, and that's going to affect semiconductor supply chain. So I just want to take a step back, though, because I was trying to understand what the Federal Reserve is doing and what the trajectory for both the economy and the world is for the next 6 to 12 months, because we're coming up in the end of the year. It's about time to put last year's forecast to bed and start thinking about what I'm going to forecast for 2023. So starting that process, trying to shake out the cobwebs and get off the hamster wheel. And the thing I keep coming back to into my mind is that the United States, still the most important economy in the world, is pursuing 3 different policies that it can't pursue them indefinitely without creating a major economic crisis. So those 3 policies are, number 1, doubling down on a trade war with China. Even a couple months ago, it looked like the White House was considering maybe we'll withdraw some Trump tariffs. Maybe we'll try and have some kind of modus vivendi with China here for at least the next year or two to try and get past the supply side problem with inflation. That went out the door with the Taiwan Strait crisis, and now we've got these really intense semiconductor restrictions. The second plank of U.S. foreign policy seems to be the United States is going to support Europe through its winter and beyond with U.S. energy exports. More U.S. energy exports, the better. The White House has repeatedly said they're not going to restrict U.S. energy exports. They want more U.S. energy exports. And then, last but not least, the Federal Reserve continues to hike interest rates, and not only hikes interest rates in their meeting minutes this week. It was very clear that they're concerned about not hiking enough. Like they're not concerned about hiking too little, or they want to make sure, in the same way that when COVID-19 happened, you weren't concerned about dialing the exact amount of stimulus. It was just hit them with the stimulus, because if you do too little, that's going to cause a problem of its own. The Fed seems to be thinking that way with interest rates. They would rather shock the system with too high interest rates than go too low and have to do things piecemeal. And it doesn't seem to me that the United States can have all three of those things and not have an economic crisis. And the basic reason for that is China, however you may feel about it politically, still the factory of the world, still the consumer of commodities that is probably the most important in the entire world. They've got their COVID-19 shutdowns going on. If you're going to go after them on that level, it's going to ripple throughout the economy. If you don't restrict U.S. energy exports at all, then the only part of the CPI that's been falling in recent months, which is the energy index, is going to start climbing again, because there's limits to what the United States can release from the Strategic Petroleum Reserve. There's not a similar reserve for natural gas. And the advantage that the United States has enjoyed for over the last decade, which is cheaper energy prices relative to Europe, that's going to start to go away. And then you get the Federal Reserve hiking on top of it, and it just doesn't work. So it seems to me that one of those legs of that tripod has to get kicked out. Otherwise, and it might not get kicked out, but if we stick with those three policies going forward as on their current trajectories now, then the economy is going to hit, is going to hit a windshield like a bug, and we're going to get a pretty ugly, I think, reaction, not just in markets, but in just sort of every single economic indicator should be telling us that things are not going to go well, and we're going to see a slowdown in growth, and all the things that the IMF is warning about. So that's kind of where my head is at, and my instinct is to figure out which one of those three legs in the tripod is going to go, because whether it's because I'm hoping that the bug doesn't hit the windshield, I don't know, but I'm hoping that there probably is some hope there that the economy is not going to come to that sort of come to Jesus moment. But it also seems to me like there are policy things the United States can do to avert the catastrophe, and you would think that they will if they have it within their power to do so. So I started off rambling a little bit, Rob. What do you think? I mean, if you're trying to pull back a little bit from the last couple months and think about going into next year, do you like that framework, or do you want to pick at it? Do you see things that I'm missing?
I guess if I had to hear everything that you just laid out and put a framework around it, to my mind, I mean, you're more fluid with these sort of bigger picture theories than I am. But the way that I would think about that is these are all consequences of the United States shifting away from its unipolar moment. So if the prior system was based on the US underwriting the global liberal order, everything that you just described are symptoms of different ways of that shifting away. So the trade war with China, that one's very obvious. But even on the Federal Reserve thing, for instance, the real issue here is labor costs. That's what the Fed is worried about. And that's what, in this CPI print, has been the main focus of conversation. It's no secret that industrial commodities have really dropped. It's no secret that energy prices have started to really drop. We've talked about this. We're just looking at the charts, and anyone can do that. The thing that has people worried is the notion that you have sticky labor inflation. And most of this inflation is happening in lower level services. So restaurants, travel, hotels. But then in the healthcare sector, for instance, nurses, there's a shortage of nurses. It's getting worse. We've actually written about this for our clients, about what appears to be almost a death spiral in nurses, where the worse things get, the more nurses drop out, and that makes it worse for the nurses that remain. And I say all this because, to my mind, the word that no one talks about is immigration. And I thought it was kind of interesting. I don't really want to get into the UK per se, but the fact that Liz Truss said we should be making an effort to allow more immigrants into this country, I wonder if that could be some kind of canary in the coal mine for a change in rhetoric around that. But all of these things seems to be connected by the withdrawal of the U.S. from that position of responsibility, that position of underwriting um, the former system, and figuring out how the different parts are going to fit together is really the challenge for people like us.
Yeah, there's a lot to work with there, but I would push back a little bit and say it seems to me that the problem is that the U.S. is still trying to underwrite the system, but is failing or is not capable of doing so. Is that what you mean by the shift
Yeah, we're
direction you're
trying to do
describing?
so, like with the energy thing, for instance, trying to support Europe with one hand, but then squeeze China with the other hand. It's almost an internal contradiction as we lose our clarity to the extent we ever had it.
Yeah, and I sort of laid out my tripod of policies there, and I'm hoping that there isn't an economic catastrophe waiting at the end of that trajectory. Uh, Oil prices are telling me that it is the economic catastrophe is what is waiting at the end of that trajectory. That the United States is going to keep doing those three things. OPEC plus cut production last week. We talked about it a little bit, 2 million barrels per day. And last week we were sort of waiting on, tenterhooks. What's going to happen with the oil market? Is it going to go like, should we double down on short? Should we get out of the short position and think about long because the Saudis can try and actually drive up the price a little bit more? Oil's shrugged this week. It's even down a little bit from where it was last week. So that's at least one indicator that's telling you, hey, like it doesn't matter all these other things that you're talking about. It looks like we're coming to this sort of economic decision point, and it's not going to be good. I thought I might ask you though about I hadn't thought to ask you about about the thing about nurses specifically, because my wife is a nurse, and we were talking. One of her friends came over who is a teacher here in New Orleans last night, and we were having a glass of wine, and I went and put the baby down, and I came back and was greeted with the question, Jacob, you do investment stuff and economic stuff sometimes as part of your job. How do we pay nurses and teachers more? And I was like, wow, well, I have no idea how we get like more money
We're gonna need
to
another glass of wine.
well, I need a lot. I need them to have more glasses of wine so they think at some point that I said something that was insightful because I have nothing for them. But I bring that anecdote up because their point to me was that, well, nurses are still like, if there's a death spiral in nurses and availability of nurses, it's because they're not getting paid. And it's because you're not actually compensating people for the services that they're giving. So if we look at I think health services was up. I can't remember if it was 1% or 1.9% in the CPI print. That's not that much when you look at how much nurses are making and what they do in terms of their responsibilities and things like that. And it's actually kind of an insightful question. Like if teachers and nurses and all these people that we value so much, and it's driving up labor services inflation, but those folks aren't making enough money to make it worthwhile for them to actually stay in their jobs. They'd rather go home and not pay for daycare, because it's roughly equivalent for them to stay home and take care of their own kids rather than go work a really hard job as a nurse and pay for daycare. I mean, something is off there if there is that death spiral in nurses. So what am I missing there?
No, I think that's right, and I'm remarkably optimistic about many aspects of the American economy, but this is one of the things I'm most pessimistic about, and I find it hard to see a silver lining, which is healthcare, just as a broader theme. So, nurses are underpaid, and we've done a lot of research on this actually, and it's interesting because um, there's an element of information asymmetry there where a lot of nurses, it wasn't clear what other people were making. And now this issue with travel nurses, we're not going to make this whole
Mm.
podcast about nurses, I promise. Um,
My
but
wife would like it.
travel nurse, yeah, we would have an audience with your wife for sure. Um, but there's a unique dynamic that's formed with these travel nurses. And these are nurses that basically do the exact same job, but because they're not associated with a certain contract type with a certain facility, they make significantly more money, like 40% more money. So now all these nurses are turning into travel nurses because you make more money and you don't have to do fundamentally anything that different from what you're doing. Um, but the broader point that I wanted to make was, if you really look, we talk about what the U.S. spends on healthcare as a percentage of GDP. It's in the high teens, which is way out of whack with other developed
Mm.
economies. You have to view that as essentially just a tax on the rest of the economy, and it's a tax that is already um, has been being weighted down by the underpayment the too low wages of nurses and other healthcare workers for a lot of sort of weird um, social science reasons, like we talked about. That's not getting any better anytime soon, and the sort of health metrics of the population are not getting any better. They're arguably getting worse as the silent generation passes away, which generally is in somewhat better health than the generations that come after it.
Hmm.
Um, like when you think about things like inflation, government deficits, I mean, that is the elephant in the room. Medicare is an enormous portion of the U.S. federal government budget, and where is that spending going to go? It's not going to go down. Um, so that's a major albatross around the neck of the U.S. economy. That's there's hard to see a prospect of it being significantly improved.
Sort of to your point, I mean, I one of the slides I always use when I'm talking to audiences, especially about food and agriculture, is hunger is increasing in the world and undernourishment is increasing in the world, even as obesity is also increasing in the world. And that's not just in developed countries; it's also not just in states like Louisiana, where I'm from. Like if you look at portions of North Africa, people are actually getting fatter there as well. And I thought I think it was the CFO of Pepsi, so some official from Pepsi, after they surprised on earnings this week, came out, and the quote that made a bunch of headlines was that he said that Pepsi was going to be fine regardless of the economic environment, because people, doesn't matter with inflation, like maybe you're going to give up, this, that, the other thing, but apparently you're still going to buy your soda. And there's something about the staying power of that. Like we're going to buy our soda, but we're not actually going to pay like these employees who are so important to the rest of the economy, kind of what they're worth. And it also, I don't know, I'm not saying anything new here or breaking new ground, but I also, one of the other slides I usually put up when I'm talking about the United States is to talk about the way that wealth inequality really has exploded here in the last 30, 40 years. And wealth inequality in the United States, and this is not just an American issue, but I have the US data at my fingertips. But if you look at US wealth inequality, it's at the highest in recorded history. We have data going back to about 1917, so it's higher than the Great Depression. I would love if some PhD student out there did this for the Gilded Age and told me if wealth inequality, either after or before the Civil War, was similarly high. But you would think that at some point things have to give. And I jokingly tweeted this week, but the Wall Street Journal had had one of their headline stories when I logged on to their website a day or two ago, was a story about these people in California who are building subterranean mansion basements because they can't actually expand above the ground. So they're like adding 7,000 square feet and spas and shit like this underneath their houses. It's baseball playoffs right now. I'm thinking of these guys who are getting 10, 12-year contracts for 300, $400 million. And then you go out and have drinks with your friends. And it's like, yeah, I'm thinking of, quitting a nursing job or quitting a teaching job because I'm not making enough money, even though the CPI tells me that wage inflation is super up. And to your point about immigration, I mean, immigration reform in the United States has been stalled for 30 plus years. We've needed immigration reform for a long time. Maybe the need for lower skill labor will produce the political compromises necessary to get some kind of immigration reform through the system. But to your point, you can't, you're probably not going to, you're not going to import nurses or teachers. Like that's really lower skill labor forces. And then sort of the system moves up. So, um, yeah, I don't really know, absent higher taxes and the government actually intervening and trying, or organized labor reasserting itself, which also is sort of a hard thing to imagine. It's hard to figure out how some of these problems or these inequalities in the U.S. labor market and the U.S. economy themselves are going to work it out.
Yeah, and you used the word crisis before, um, which I don't think is really the right word per se to use, because a crisis, to my mind, is like 2007, 2008,
Yeah.
where you had a financial, sudden shock, and the economy suddenly goes into free fall, and you sort of have this V-shaped event that's very traumatic at the time, but it's fairly straightforward. I think what we're experiencing here, and we use the word volatility a lot, but again, just volatility rippling through all of these complex systems in widening and widening oscillations. And, when you think of the amount of fiscal stimulus that went into the system, and now the Fed, the the severity of the interest rate hikes that they're implementing to squeeze out the inflation from the system. Um, this is it's not a crisis per se. It's likely to be sort of a sawtoothed series of crazy events and reactions to those crazy events that beget further crazy events. I think that's the way that I would model it in my head.
Well, that's one of the other reasons I wanted to try and step back and have more of a blue sky podcast than a weekly roundup podcast, because I think that's one of the things. I don't envy the folks at the Federal Reserve. Like, they have a mandate, and their mandate is fairly limited, and it's fairly short term. And I mean, I think it was David McWilliams. I listened to him on a podcast once, and he said, you have to understand that the whole role of a central banker, to your point, is to avert the actual crisis. So the few things that they have, whether it's adjusting the balance sheet or raising or lowering interest rates, often we ascribe too much agency to some of these central banks. All they're really trying to do is buy time, and buy time either for the political system to come up with policies that will fix the underlying problems, or for structural forces like demographics to come and assert themselves and sweep some of the problems under the rug. And to your point, maybe crisis is the wrong word to use, but the longer volatility goes, and the more the more the dollar is sort of higher, right? And the more food prices start to go up, and the more you start to see military conflicts like the Russia-Ukraine war sprout up, it just feels like you start opening the door to all sorts of problems that you wouldn't have expected before. I mean, like, go back to this time last year. I would say this year, as a geopolitical forecaster or analyst, was my worst year in terms of trying to predict what was going to happen in the year ahead. I missed it all. I thought there was going to be an Iran nuclear deal. I thought that I did not think that Russia was going to invade Ukraine. When you just kind of look across the scale, I wasn't able to get things right, and I'm trying to think about how to recalibrate things in the world to go forward, because it seems clear that things have changed, but they haven't settled on any kind of firm foundation to move forward, I guess.
I think it's really hard because a lot of these things happen as a result of events that happened before them. So hypothetically, like, I could imagine some huge conflict breaking out, I don't know, maybe in Armenia, Azerbaijan, or something where, because of what's happened in Russia, Ukraine, there's been a new imbalance of power, and someone sees an opportunity to do something aggressive, to resolve some longstanding grievance. And then you get another, we'll be talking about the licorice markets and Uzbekistan being clogged up next year because of this conflict. Um, so it's hard because those ripples go through, and they create events that you didn't necessarily have top of mind before the volatility started kicking up. Um, I find this, and I'm going to put this out there and tell me if you think it's crazy. I find this scary, but also extremely optimistic in some ways, because I know we've had this conversation a lot, and you compare the current period to the Belle Epoque period. But the one thing that I think is different is sort of this notion of volatility in our lives and in society getting more and more intense over time, which I think is more like the World War I period, more like the 1920s, where, like, if you really picture what was happening then, imagine living in a city where all you saw were horses your whole life. And then within a span of 10 years, you see these weird machines driving around all over the place. Just think about psychologically how that changes your vision of what's possible in the world, what's possible in the future. And that unlocks wonderful things, new technologies. Like, if you look, most of the, like, really, really transformative underlying technologies of the earliest 20th century were developed in the 1920s and the 1930s. The internal combustion engine, electricity really spread. All of these general purpose technologies that are revolutionary were coming out of this period of volatility. And then, of course, on this, by the same token, when your sort of understanding of the possibilities of what can happen gets blown open, then you see some of the most horrible visions and things happening as well. So I feel like there's echoes of that today, and hopefully we're, you know, uh, bendable and strong enough as a society to resist the worst things that come out of that. Maybe that's too optimistic, but there's there's reason to be really positive in some aspects as well, I think.
I don't. I didn't find that particularly uplifting or hopeful. But let's hack into that a little bit because have you seen Midnight in Paris, the Woody Allen movie?
Sure.
It's like it's the only Woody Allen movie I really actually like. I think because all the other Woody Allen movies are, it hits a little too close to home in the same way that Larry David hits a little too close to home for me. I can't really appreciate him because I know too many Larry Davids and have a genetic predisposition to being Larry David myself in my life, which I'm constantly fighting against. But that insight that he has about how the Owen Wilson character wants to go back to the 1920s because that was the best time, and then the love interest that he meets in the 1920s wants to go back to the 1890s because that was the best time, and we're always looking backwards towards a golden age. There is that. I'm always kind of constantly fighting against that. But when you were talking about sort of the 1920s and that being where a lot of this technology takes off, there's 2 points to that. The first is that um, World War One. I said the Woody Allen thing because I wonder if in the 1890s they had that level of optimism that you're talking about, and I think they did. I mean, Jules Verne is coming around that time, I think, right? And there's a whole sort of imagining of what the future is going to look like. But World War One shattered that. Humanity and especially European civilization thought it had come so far, and then it plumbed the depths of what the worst possible manifestations of human behavior. We plumb those depths, and you come out of it. Millions are dead. You have the flu pandemic at the end of it. Even music and culture starts to change. You start getting dissonant classical music and atonal, all sorts of kind of weird things happening because people have just lost their kind of faith in the system in the 1920s. And then it goes into the Great Depression, and that's where you get also like think about like the Great Gatsby and the Flappers and the jazz and all of this kind of pushing back against what was before because it's not like what was before was that good. Um, and the reason I reacted negatively to what you said was because if we're getting into that sort of situation, like, okay, well, you'll get some technological innovation, but is it coming along with a complete lack of confidence in the current system? Because if we are moving from that unipolar moment to a multipolar moment, which is a point that I make all the time, in some ways that comes with a sense of failure from the United States. We thought it was the end of history. We thought everybody was going to become a liberal democracy. We thought China was going to engage in free trade. We thought everything was going to be great. And instead, we're like 30 years into the unipolar moment. And what do we have to show for it? We have lost wars in Iraq and Afghanistan. And the only real technological improvements we have in our lives is that we can now fit our computers in our pockets and make phone calls and take pictures with them. I mean, like that's like, so I'm rambling a little bit, but the reason what you said made me even more pessimistic was because it raises the idea that if the 2020s mirrors the 1920s in the sense that there's a complete loss of faith in the system, and that comes with both loneliness at the individual level and also, to your point, like people just doing whatever they think they can because Russia's weak, so now I'm going to invade this country next to me because I can settle some old scores. I mean, that's a recipe for a pretty depressing worldview. And in the 1920s, there was a crisis lurking at the end of that decade because we kept on partying until you couldn't party anymore.
Yeah, it's a double-edged sword. Um, the the underlying sort of theme of our lives so far. So you're 35 now, right? I'm 39. Pretty much our adult lives has been a rehash of cultural memes and other sort of things that have come before, which
Yeah.
frankly I find just so stagnant. Like if you just look at music, what the most popular music on Spotify is dominated by bands that have been around for 50 years.
Yeah.
Um, I mean, just one example of many, 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 and all of the shows and the throwbacks and the 1980s and Stranger Things and like just enough.
Star Wars Episode 13, The Return of the
Yeah.
Skywalkers.
And I know those are kind of funny examples, but it shows a certain getting your wheels stuck in the mud just psychologically as a culture. And and I don't deny that these transformations are terrible at the same time. Like World War One was a horrendous experience. It was essentially taking 40% of Western European humanity and putting them through post-traumatic stress disorder all at the same time.
Mm.
And that had terrible consequences. But at the same time, it was sort of the necessary transformation. I don't want to say necessary, but it helped to widen the perception of what's possible. Like the best book to read on this subject, which I really love, is by a guy named Paul Fussell. And the book is called The Great War and Modern Memory. And it's really a discussion of literature. And if you read this book, you would think, oh, this is just about a bunch of old poets. But it's really about this process of having your mind turned upside down. And, he goes into detail about how people just saw the world around them before and after the war. And he uses this famous line where he says, you know, Thomas Hardy in 1909 was writing this thing, and it was a time when the word machine was not naturally connected to the word gun.
Mm.
Um, so anyway, now I'm rambling, but the point is, these are really traumatic transformations, and I don't know if they're necessary ones, but I do think most people would agree that what was the dominant system before, the status quo that we were living in, was one of stagnation, and that's ending for better or for worse, I think.
Yeah, and listeners, like, this is a more lugubrious episode than you're used to, and I'm sure some of you will absolutely hate it, and some of you will probably actually love it. But I think it also, like, I really intentionally wanted to get away from the hamster wheel of media headlines this week. So I'm just telling you, I know that this feels a little open ended and a little abstract, and don't worry, it's not going to be like this every week. But I think it is important sometimes to stop and have conversations and just say, like, I don't really understand where we are and where we're going, and try and kind of reset our brains, because that's definitely where I am. And Rob, you're about to move, halfway across the world. So I'm sure in your head, you're also thinking of transitions and things like that. So that's why I'm sitting here and dwelling on this, rather than, going back at Rob and being like, now tell me what is going to happen in the UK bond market now that Liz Truss is being, cornered in the back room of the House of Commons and she's losing her backbench. So, like, I don't like we'll get there. There'll be plenty of time to analyze everything that's going on, but I do think it's important to kind of dwell on this a little bit more. And I one of the things I don't think I've ever brought this up with you, Rob, or brought this up on this podcast, but I one time with my best friend, we decided to go back and look at inaugural speeches for U.S. presidents going back 100 years. And it really is remarkable what happens. There's a decided shift in the late 1970s and early 1980s. Before the 1970s, like, U.S. presidents of both parties are the most optimistic people you can find in the world. Like, Lyndon Johnson's like, we are going to cure cancer by the end of my presidency. We are going to eliminate poverty. We're going to do all these things. And it doesn't matter if you're Democrat or Republican, whether you're Kennedy or Eisenhower, like, go back and read the language. It's flowery. It's optimistic. It's how are we going to change the world? And at a certain point, and I'm not blaming Carter or Reagan for this, but the language changes. It goes to, let's make America great again. Let's go back to the golden age of the 50s. Let's listen to these oldies that we had at the time, even though that was a time of, like, really intense social dysfunction in the United States too. But instead of, let's cure cancer, let's end poverty, it's let's deregulate, or let's have free trade, or, these sort of these watered down goals. And I bring that up because you use the word necessary transformation. One of the things that's frustrating about this world today is I don't think that any of this is necessary. Is it really necessary that the United States and China engage in a trade war that just puts them on the trajectory towards great power conflict down the road? Is that really necessary? Is the world served by the two largest economies in the world having a pissing contest rather than working together to bring people out of poverty? Like, yes, we have differences. There are parts of their system that I think are absolutely horrible. I'm sure there are parts of the US system that the Chinese government thinks is absolutely horrible. Is it really conducive to just sit here and argue about that all the time? But that's the level that we're at. People are scoring points off of each other. And using this sort of great power competition mode rather than thinking about, well, how do we make the world better? And it's ironic because all of the U.S. policy, and this is why it's so hard to unwind this if you're an American. U.S. policy, though, it uses the language of we are the shining city on the hill. We are the beacon of freedom and democracy. Like everybody should do what we do because we have these ideals and they're better than everybody else, and we protect the individual. And yet, we're buddies with Saudi Arabia. And yet we engage in these wars that we just kind of we sweep them underneath the rug when they don't look enough, and that's what the other side can rely on. It's the sliver of hypocrisy that an authoritarian regime can point to and actually hit a kernel of truth, and I think in some ways keep some of those regimes kind of up. So I guess I'm trying to say two things there. It seems like optimism in the United States in particular has declined, I think, since the 1970s. And yet we also seem more sure of our moral righteousness than ever before in our history. And I don't think that works. Like we can either be pragmatic about trying to make the world a better place, or we can defend our interests. But the world is not going to be a better place if we have our back against a wall and we're defending our interests. And that's how we're behaving right now.
Well, we need to have a vision, and I think that's correct, what you point out, that we have not had a vision, and yet we retain all of the negative aspects of our system and society, as you say. So,
does anyone have a vision? Because it seems like we have a death of vision too, and it's not just in the West. Like I'm very cognizant of being a white dude here in the United States, thinking about this from this point of view. But think about previous conflicts, like the Cold War. Sure, like you superimpose the ideology on the geopolitical conflict, but the Soviet Union, like there was a real ideology of communism there and of the global proletariat rising up and assuming the means of production, and that being the thing that was going to be better for human beings. And the United States said, no, we have a different system. We think your system leads to war and authoritarianism and catastrophe. We think our system of liberalism and individual rights and freedom of expression, this is the way to sort of raise all boats. Whereas I look around the world today, like let's say Russia collapsed tomorrow. You wouldn't. I think I raised this in a podcast a week or two ago. It actually doesn't make sense to use the 1917 Russian Revolution analogy because there's no ideology in Russia that would rise up against whatever Putin has got. It would just be warlordism and dudes running around doing whatever they wanted. Look at China. What is the ideology of China? Yes, Leninist, Marxist. There's some like materialist facade there, but when you actually read what is the great contribution of Xi Jinping thought to world history? It's the great rejuvenation of the Chinese nation. Everybody's talking about their own nation, their own thing. That there's no underlying sense that there is an ideology or something that connects us all. And I don't know. The best example of that is the COVID-19 pandemic. Like the pandemic doesn't care whether we're Chinese or Russian or American. Like it killed us all the same, and we all use the pandemic to settle scores against each other. So it's not just an American thing. I think you and I are sitting in America, and we feel the same way. I'm curious if you'll probably feel that way in France. I feel like in France they've had the death of optimism for probably a century.
Well, the European example is a good one, and that's the one example I would point to for where there does seem to be a vision. And not to go every podcast and say, about how optimistic I am about Europe, but it's true. And this is getting to the heart of it, which is obviously there's a lot of debate, there's a lot of infighting, but really when you survey the world like you just did, that is the clearest vision in terms of what is a future of, the world, some new system that's better than what we have today. And when you look at this notion of just sort of, I don't know what the right word for it is, environmentalism, finding some balance with nature that we don't fundamentally have in the current system, and trying to create a system around that, that's a very powerful vision. And it's a vision that I think is becoming more accepted across broader swaths of European society, especially, but in other countries as well.
I wonder if that's one of the reasons that ESG had such a sort of explosive time in the limelight when it came up. This idea, for those of you who don't know what ESG is, environmental and social governance, and I don't know exactly when it happened. Maybe you know, Rob. Like, what was the year that the investment community like flipped a switch and it was like, we're gonna like look at everything through the prism of ESG and give you a score based on how good you are for the environment or not. But it is a worldview. It is a worldview beyond nation or sort of parochial local interests, and maybe that's one of the reasons it was compelling. That's one of the reasons someone like Elon Musk is so compelling, because even he has all these skeletons in his closet, and he's not all the things that he's cracked up to be, but he did articulate a vision, a different kind of vision of the world that at least some people wanted to latch onto. I was hanging out with some boomers the other day, not to throw too much shade at the boomers, and I was shocked at how many of them were like, yeah, I love Elon Musk, like he's weird, but he has a vision of the future, and I believe in that vision. And it's just kind of like, I don't believe in that vision, but I guess you're looking for some kind of vision. Maybe, I don't know, am I stretching there for ESG, and that being one of the reasons ESG um, became so popular when it did within a certain rarefied faction of the population?
Well, the cynical answer is that ESG became really popular when tech went into its bubble period, because that's what all the ESG funds held.
Yeah, that's fair.
No, but the real, the real answer is, I think ESG touches on a real fundamental human desire, which is to create a system where other measures of good are priced, where there's a market price for environmentalism that somehow gets taken into account, um, and is brought into the balance. Because that's what ESG is about. We're going to penalize companies that treat the economy or treat the environment badly, whether that's emitting too much carbon, whether it's polluting, whatever it may be. And of course, that ballooned into including all sorts of, kind of fuzzy social measures, um,
Well,
and it
it
went
became it
beyond.
became an identity crisis, because the folks that ESG actually took aim at were, farmers using fertilizer, or, oil and natural gas companies that literally heat and power our homes. And it's like, you can't, like, in some farmers is a really great example of this, and agriculture is a really great example in general. You talked about the 1920s. Like, modern fertilizers come out of World War One, and it's the use of modern fertilizers that allows us to have this incredible population explosion we've had for the last century. We can spend so much more time doing things at our leisure, because we can reliably produce larger and larger and larger yields of food because of fertilizer. And yet, because it is so energy intensive, and because it's still based a lot on natural gas and some of these other hydrocarbons that the ESG guys don't like, it's sort of like, well, farmers have suffered over the last 100 years. The crops that they sell, the price has gone down and down and down, to do things for the human good. And then some ESG wonk comes in the 2010s and says, you farmers, you're really destroying the environment right now. We're going to have to cut you down to size. And I deeply relate to farmers when they're like, well, screw you. What did you guys do to actually improve the world? I was at least growing food, and now you're telling me I can't grow food because of some like manufactured ESG thing. I don't know if you saw, I put this in our knowledge platform kind of as a joke, but apparently, like, New Zealand wants to tax their farmers for their cows like farts and burps now. Like, they want to somehow measure like the quota of gases that's created from the cows like farting, and then they're going to tax
Is
the
that
farmers on that. Like, it's
is
like,
that measured on a per fart basis?
I don't know, and I would hate to be the scientist who has to come up with the device that accurately measures those things. I assume it has to go somewhere. I don't know. Maybe you could do it in the air, or maybe a drone is going to fly around the livestock and figure out what's going on. But the point is, yeah, I mean, that's another problem with ESG, because you're right. We do need to figure out how to live better with nature, and yet the most coherent response we've had from both the investment and political community to do that was co-opted from the start, or maybe was an evil conspiracy theory from the tech companies from the start, to actually go at the folks who could make changes if you helped them and empowered them. You brought up electricity. Electricity is a great example. Electricity did more to raise people out of poverty and decrease the amount of work, like physical hard labor that humans had to do, than anything else. If you had just left electricity to the free market, say in the United States, it wouldn't have worked. It took the US government going in and saying, you know what, we are going to fund and incentivize to make sure that electricity is built out in all the rural parts of the country. And like that's before, like, the US had the huge government that it has today. There were certain problems that the government was the one that had to come in and kind of fix things, and that's not the level that we're talking about things today.
Well, it's a massively complicated problem because you're trying to put a price on something where a price didn't exist.
Right.
And it's not fair to put that entirely on the shoulders of people who work in the most carbon intensive industries, and then applaud someone who works at Google because they don't emit much carbon. It's not exactly a fair comparison. One thing that really caught my eye recently, not to always go on about France, but I put this on the knowledge platform. I don't know if you saw this. The piece in Le Monde, I think it was last week, talking about how the Green Party in France has had to change its message, which was a real eye-opening a piece, because it was talking about how the more progressive or more extreme parts of the Green Party, which is now a significant party in France, it's not a fringe party anymore. They've
Hmm.
essentially taken over from the socialists. Um, that they previously used to speak of um, essentially degrowth. So we have to strangle the parts of the economy that are emitting carbon, um, because this is an existential threat, climate emergency, et cetera, et cetera. And now the party has essentially decided that we can't talk about that anymore. Like, we cannot use those words. People associate that with economic recession, with stagnation and decay. We have to project this image that is much more forward thinking, much more optimistic, um, which I think is an interesting comparison, because I think much of this ESG rhetoric was about, of course, it brings out the nannies and us all. You're doing the bad thing, and look how righteous I am. Um, but the more that we move away from that, and that seems to maybe be starting to happen at a bigger scale, the healthier then that probably is.
Maybe. Anyway, we've gotten a little bit off track, and we've been talking for 45 minutes now. So I'm gonna sort of bring us in range of a close and say thank you to the listeners for your indulgence for listening to us try and get our bearings here. But if we go back to kind of where we started, I think again, just going back to that framework of the United States pursuing three policies that don't actually work together and having to give up one of them. Um, do you think do you think the United States will give up one of them, Rob? Or do you think that the United States is just going to keep doing what it's doing, and we're just going to keep buying time as long as possible, and we'll just kind of see where the cards, maybe it'll be a hard landing, maybe it'll be a soft landing, but it doesn't seem like the United States in particular as a leader is interested in U-turns, as far as I can tell.
I think in each of the cases that you laid out, the United States is going to continue pursuing whatever policy it is until market prices create a strong enough signal that the opposite should happen. So if people's electricity bills go too high because natural gas prices are too high, because we're sending all this gas to Europe, then there will be a response. If the next iPhone becomes too expensive because we've cut ourselves off from Chinese supply chains and electronics, then you'll see a response, and otherwise you won't. I think, again, chaos, volatility without a clear vision is what we should expect. But just to put, you know, this was a very theoretical discussion, which is different from the usual kind of brass tacks stuff that we get into here. But I just want to point out, this is the sort of discussion that we have regularly internally here in our research meetings, and it's a good use of our time, because this is how you have to operate if you're acting in this environment. If you're an investor, you need to have a big picture framework, even if it's not correct or not perfect, of some way of conceptualizing the bigger picture things that are going on, and then setting out what's going to disprove that, and then what's going to make you have to shift and replace that with something else. But putting these frameworks in place and then using that as a springboard to dive into, well, should we be short coffee here, or should we be buying European industrial stocks? Those real nitty gritty decisions, without conversations like this, which we have regularly, and which on our sort of shared whiteboard, we have literally written out and laid out what are our assumptions, what would disprove that, what is our level of confidence. If you don't have that compass, you're just bouncing around from one crisis to the next and being reactive.
Yeah, the silver lining of uncertainty and volatility is that it affects everyone equally. Um, so the investors or the companies or the people who are best suited to deal with times of uncertainty are the ones who are willing to sit with uncertainty and be uncomfortable with it, and talk about it in ways that are open-ended and be honest about sort of the lack of certainty they have in the system versus the hot takes when you go watch financial media. One of the reasons I decided to try and make this conversation a little more theoretical today was because I read the CPI print. I turned on Bloomberg and CNBC just to kind of see what everybody was saying, and the sky was falling. Everybody was like, oh, this is the worst CPI print, and it's the stickiest part with the services and the medical expenses going up, and this is terrible, and the Fed might get to 5.5%. Is it going to be 100 basis points at the next hike? And literally within 3 hours, the market had roared back to life. It had accepted all of its gains. There's that brief hour in financial media where something happens where the old headlines and the old subtitles are still there. So the market's up 600 points and the Wall Street Journal still has like in big, bold, inflation, terrible. Like the market responds really negatively. And then it flips and everybody's like, well, wait, I thought this morning all the talking heads were like, this is the most terrible thing ever. And then by the end of the day, they're like, this might be the capitulation. This might be the time to buy bonds. So I just had that sort of in my face today too. So that was one of the reasons I also wanted to take a step back and just say, like, there's a lot of uncertainty out there. Like if you're not stepping back and sort of admitting what you're uncertain about, you're probably missing the boat, because lots of people are out there peddling certainty. And I don't know tons of things, but I'm pretty sure that they're wrong. Although that only a Sith deals in absolutes. I'm getting very, very close to tautology there.
I guess another way to put it is the only way to have success in what we do is not to, run from one certainty to the next, which inevitably you're wrong about, or it changes as soon as you are right, but to have the most flexible and rigorous framework for managing uncertainty and quantifying the risks around that uncertainty and acting reasonably when all of that lines up in different ways.
All right, well, why don't we put a pin in it there, and I'll just say we'll leave you on tenterhooks again, listeners, because one of Rob already alluded to it. We talked about being short coffee. So one of our bets right now is being short coffee, and it was kind of teetering back and forth and stuff like that. Right now, that trade looks good, but maybe we'll check back in on it next week, Rob. We'll give it a week to kind of marinate, to let the coffee grounds bloom. And see where we are next week and get back to brass tacks and telling folks how to get from this theoretical conversation to expressing it in a trade that actually does things for investors. But we'll do it from you'll be in Paris. I guess I'll technically be in Europe next week too for a speaking event too. So we'll talk to you next week, listeners. And if you hated this podcast, let us know. If you loved it, also let us know. Don't worry, it's back to our normal thing next week, unless you all loved it, in which case we'll just do this every week. So
or
Rob,
just do nurses.
Travels. Or just do nurse. I think there's a huge niche audience for nurses and teachers and the geopolitics of nurses and teachers. And we kind of need to go here, but I will say that, like, the country that has the best if I could have an index that told me which country in the world had the best teachers, I'd bet on that country relative to the others. Like that's a big part of like what allows the next generation to find the next technological innovations. But I think we'll leave that for another time. Cheers. Thank you so much for listening to the Cognitive Dissidents podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.